right, let's get rocking and rolling today. Sorry for the little bit of a late start. I have 2 monitor system, and when you turn your computer on and one monitor won't come on, more technical difficulties with Lan Turner. Then you have to reboot your machine 2 or 3 times. You can't seem to see what's wrong. So I apologize for a little bit late start, but I'm glad you guys are sticking around with me, and we'll get rocking and rolling here in a second. So give me just a second. And what we're going to be doing today is, we all know, morning session, we're going to be looking at the stock market primarily. And we're going to go through, and I want to go through and just kind of review some of the trades that we're in. And then we're going to go through and look if there's not any other better opportunities for us. And we have some difficulties going on with a couple of our trades. So we have to kind of take care of those. And then, of course, we want to go and double check and see what's going on with our UBI, Universal Basic Income portfolio. All right, so that's the name of the question. Randy saying, thank you very much for answering my UBI question. You're welcome. That's over in the comment section. If you guys want to have a conversation over there, we talk pretty in depth. If you ask a question, I'll try and answer it as best I can. And so make sure you always swing by the comment section afterwards or leave a comment. And it'd be nice to see you guys talk to each other over there too. So get our comment section going a little bit stronger. That's always nice. And thanks for the question. And hopefully it was good information. Help you out a little bit. Best I can. All right, let's come in. We're going to start off with AMD. AMD is our big winner. Actually, we got NVIDIA's down here kicking some rocking. Ooh, look at SMC just took off too like a rocket ship. We got some nice winners in here. We had to get rid of some of the covered calls because they were ready to die on us, and we didn't want to do that, and I didn't want to wait another couple of days, so I got rid of a couple of those covered calls. So we're just here with the long calls at this point. So AMD, we're up $7,000 on that one. That's a nice one. You can see right in here. We got 309 days. Now I put all of these really long leap options because we were talking about leaps the other day, right? And so we got to keep in mind what we've got going here. Oh, that's not good. That puts me right in the way. I don't know if that's good either. That covers up the name of what we're looking at. Let's come back over here. That's always annoying right up there. Let's go back to, that's always annoying. Just having land on the screen is always annoying. Let's go back to here for a minute. All right, hopefully you can see that. Okay, so we're going to come in and AMD. You know, the one that I'm struggling with right now is the biggest one that I'm struggling with is Palantir. And the reason I'm struggling with Palantir is because we took our profits on Palantir, and it come up here, and we took our profits on Palantir. It didn't break the blue lights right there like I wanted. I wanted it to break the blue lights like that. I start looking at it though, and I'm like, this is A1 right here. This is A2 right here. That makes that A3. So if that's an A3, it wouldn't break the blue lights. It'd have to go up one more run. And I had this set up like this. I think initially I was like, I put this down here. This little thing here is A2. And then this A3 here, which made that A4. So I was looking for this to break the blue lights right here and putting all of our little trundles right in here. But you know what? Yeah, hindsight's 2020. Maybe it is an A4. I don't know. You just kind of have to, you know, the breaking of the blue lights, little break down in there. So I called this, just with hindsight, we're going to call this like this. And that makes this A3. And, you know, kind of works out that way. So this is your A1 right here. Either here or here, right here by this blue light. And then this first little break right there, which actually almost looks like the second break to me because of that little tiny thing right there. But here's the arrow. So this is all, we're going to call this all A1 right here. This is our first break, our first opportunity to get into the market alongside. That becomes our A2 right there. This is A3 right there. Okay, land was off by a point. I don't know. You never know until it happens. You just do your best, all right? You just do your best. It is what it is. So there we go. So we're going to call that A3 right now. And so we're waiting for that market to break. We got to have it break those blue lights. If it doesn't break the blue lights, we can't get back in. And getting back in is what I want to do. You guys want to get back in? I bet you want to get back into Palantir too. And my son is excited, anxious to get back into Palantir too. He took his profits off a little bit sooner than I did. He started taking his profits off right in here. I took mine off right up in here. So I didn't get back in right here like I wanted. And now it's back up here. But it looks like it's getting ready to, I don't know, how far can that market go? It can go a long ways. This is our Fibonacci projection coming in here with our ABC pattern. And the Fibonacci projection, the golden ratio is 130.9. Could it go all the way up there without us? Markets can do anything they want. I've seen them go all the way up to 200% without me. And that's really where they would go, right? I mean, that's what this would be. If we bring this thing out, this Palantir, and I made a lot of money on that ride up there. Still in it with, because I still have over almost $150,000 in here on the PLTY. I didn't ever take that one off. I'm loaded for bear on this one. And that was giving me my dividends, and I'm not going to take that one off. I'm just going to leave that one in. It's going to break. I want to see it break, make a little head and shoulders down in here, right? Like this. A little pattern up in here. We get a little left shoulder right here, a little head. We don't take this one off. This one we're married to. All right. We have to, we tattoo this one onto our Heidi, and we ride this one all the way until the cows come home. This one we don't chase the long positions. We just take the money and let it give us our dividends. So if this one would come up and give us a little right shoulder, we might get a little downside, but that would be okay. We just buy some more of this too, because this one gives us our dividends. All right, so that's our hedging. Why can't you draw anything this morning, Lan? There you go. That gives us our hedging. So that's where we want to see that come back to. Because if that one would come back into there, then we could buy a whole bunch more and go to the drive B. So this is drive A. So that's why we're looking at this one over here, because this is the growth. This is when you trade. All right. So I got out a little early. Can't say I got out a little early. I got out right here. Mostly of it right there. And then when it fell back, I wanted to start buying some more, right? We wanted to buy more. That's how we want to trade. We want to buy low, sell high. And sometimes we're not very good counts. A, B, C. I thought this peak was a good place for this thing to reverse. I want to see it break those blue lights. Let go of that. And come back down in here. Now it can come up to 130.9, break those blue lights. It's just how far is it going to come down? If it goes up to the 130.9, then it would come down. It just brings this 38.2 further down. We'd be buyers right back in here again. It's still below this location here. Back in here. All right, so that's the name of the game. Just waiting for it to go. Just wait for the market to come to you. And when it comes to you, we can go into drive B, and that's what we're looking for. We want to see a nice, big, beautiful drive B, because right now this is drive 1. So we just got to get a break so we can get into drive B. All right. Let's wait for drive B. Patience, something I don't have a lot of. I don't have a lot of patience. All right, here's AMD. This is the same thing. We're up nicely on AMD. We have $7,000 in here on AMD, and we got just a nice trend like this. And how many of you put some of these on in your real money account? I got a couple of these running in my real money account, and I'm real happy with too. So I got a really big one in Tesla. Man, I loaded up for bear with my long term on Tesla. I got a 301 days when I put it on? Can't remember. I have to go look at my real money account. But I got a big one on Tesla too, so I'm real happy with that. 309 days, I think, is where we're at on the real money one. Let's see. And I got a couple more too, so I'm pretty happy about the options turning out. Let me see. Hold on. Sorry. Got to check my real money account this morning. So where's that Tesla one at? There it is. Yeah, that one's doing well. That one's up. What's percent? Where's my percent up on that? Why doesn't it show percentages? Oh, there we go. Percent change, percent, total return, total percent change. It's up 50%. That's a big one. That's a nice one. All right, where do you think Tesla's going to be in a year? That was the way I looked at that. I was like, this thing is down here in the toilet. How big do I think Tesla's going to be in a year? So I put on a year long. And, you know, we've looked at this before with that accumulation distribution model. And it's just like, you can't draw it any cleaner. You can't draw it any cleaner. It just doesn't come any cleaner than this. All right, so there's another one on Tesla. We got a nice little pullback in here. So this, let's label it. Let's label it. Where are we at on their Tesla one? How many of you guys got this Tesla one? Because these are all the trade recommendations that we came in with. So this is A1, and that makes this A2. And we're looking for A3 at this point on Tesla. Now, Tesla's going a little bit slow. You know what? I got something I got to show you. I really want to show you something. I got something I got to show you. I was so excited. Look at that. Came right up and touched that. Oh, my goodness. Came right up and, my goodness sakes. Land, you can't draw this morning. You come right up and touch that red line right there. Look at that. Maybe I can make this bigger. I got to get down here somehow. That'll be okay. All right. Look at that. It came right up and touched that red line. And that red line that's the Donchian channel that I have set to, here, I'll show you. I have the Donchian channel set to a period of 100. And the reason I do that is because I'm lazy. All right. It's just laziness, lazy land. Just come in here because that's really, I'm just kind of trying to kind of simulate the Fibonacci ruler in there. So the Fibonacci ruler sits like that, right? So if you go from this peak to this low, and then the retracement on that overall longer term trend is back to the delta cone of probability, the one standard deviation. So that puts it right in there. That's what a Fibonacci ruler measures, all right? It measures the one standard deviation. So one standard deviation from here down to here, back to the one standard deviation. So that puts it there. And that's why I put that Donchian channel on there, because the Donchian channel will just kind of draw that for you. And it usually does a pretty good job of measuring from the highs and the lows. And then it puts that red line in there, which is, you know, dead center at 50%. So 61.8 is up here, 38.2 is here. And we just call that the delta cone of probability, or the one standard deviation, or what I call the Fibonacci sweet spot. Okay. So the market likes to go down, come back half, 50% of the last major move, and then it'll drop. Now we'll expect it to drop. All right. So it's got to hit A3. That doesn't have to. It doesn't have to do anything you don't want to. Knock that off. All right. So we come in here, and it doesn't have to do anything it doesn't want to do, but we're looking forward to at least break down. We'd like to see it come down and break those blue lights, but those blue lights are a long ways away, and this is an A3. So kind of looking for another pullback in here, maybe down. We'd see it come down in here, maybe touch that trend line. That's what I'd like to see, and then back up to 61.8. That would be where I'd like to see that thing peak out on this A3. That would be optimal. Oh, whoa, I hate all these levels. Send to back, send to back. There we go. So this come down here, and we would expect this to be down in here. That's what I would like to see. And then we get one more, because that's a drive one, right? So drive one, drive two, and a little drive three. Let's get up in there, and a C drive. So let's have this little pullback and a rally back up to 61.8. That would be perfect. Nothing's ever perfect. Sometimes it is. You'd be surprised how sometimes perfect. And then maybe something like this. Not like that. No gaps. Something like this. We get a little break. And then that would be another one standard deviation from the low up to wherever it peaks out. Maybe 61.8, maybe 50. Who knows? Right up in here somewhere. And then we'd look for it to come back down into at least 38.2. That's a really popular place for market to come, but maybe back down into the Fibonacci sweet spot, the one standard deviation of the first drive. And that would be drive A right there. All right. So that's where you can start loading back up. And that's where if it did that, if this market would come back down into this region here, we'd back the truck. We'd sell the farm. We'd sell the children. I might even sell my motorcycle. No, I wouldn't do that. You can't sell your motorcycle. That'd be like selling your left. You know what? Can't do that. Just can't do it. You can't do it. I know. I was telling people to sell their Harley motorcycle the other day, and then afterwards I was like, why would I tell somebody to sell their left? You know what? You can't do that. So don't sell your motorcycle. All right. Whatever you do, don't sell your motorcycle. Okay. But land, you said I could sell it and then I could put it in the market. And with all the money I'd make, I could buy me a new motorcycle. I don't know if you can go without a motorcycle. I think you have to buy your second motorcycle first and then sell your old one. You're not allowed to ever be in life without a motorcycle. That's against the rules. It's against the rules. You cannot be without a motorcycle. Not even for that short period of time between where you'd sell one and buy one. You just can't do it. Can't do it. Cannot do it. All right, let's see. That's what we're going to do here. Oh, I got something I want to show you. I got something I want to show you. I sent it right here. Oh, hey, while we're at it, we can talk about Pit News Magazine. Didn't mean to pull this up, but since it's up, hey, how many of you guys have Pit News Magazine? Did you guys go over and join Claire's Pit News podcast on air, Pit News on air? You better go do that. Go over to pitnews.com and click that little on air thing, and you can go join Claire on her new podcast. All right. She wanted to put together podcasts, so this is not the one I want. That was an accident to open that one. Let's open this one instead. All right, there we go. All right, here it comes. Here it comes. Watch this. I got something really special to show you here. You're going to just laugh your little asses off. If you guys have been with me for any amount of time at all, you're going to laugh your heinies off. I didn't say asses, okay? I said heinies. Okay, there's one. Where's the other one? There it is, right there. You guys are just going to laugh and laugh and laugh. You're going to laugh for 3 days on this one. We're going to laugh about this one for probably for as long as you know me. You're going to laugh about this one. Look at this. Look at this. Look at this. Do you guys know who that is? I know you know who the guy on the left is, and I know you know who the guy in the center is, but do you know who the guy on the right is? Randy says he caught the podcast. Good for you, Randy. Did you enjoy it? She's getting ready. She's going to do another one. She does them every Wednesday. All right. So once a week. She can't do them more often than once a week, but it'll be fun to do them at least once a week, those podcasts. Do you guys know who that is? Anybody got a guess? There he is, Jay. Jay comes through with it. That's Larry Fink. That's Larry Fink. Can you believe that? That is Larry Fink. Watch this. I got another one. Close this one and bring you up this one. Larry Fink, BlackRock CEO. Look at that. That is Larry Fink. You guys know who Larry Fink is. He's Aladdin's daddy. He's Aladdin's daddy. He's Donald Trump's daddy. Who do you think owns who? All right, Jay, who do you think owns who? Who do you think owns who? That is, when I saw that, I just about fell off my chair laughing. Because you know what? You know, I believe deeply. just the evil back of his head. Larry Fink went to Saudi Arabia with Donald Trump. Now he took a lot of people. I mean, Sam Altman from OpenAI was there. Of course, Elon was there. He took all kinds of people. I mean, he took a whole consortium of people. But he took Larry Fink. Oh my gosh, I couldn't believe it. I was just busting up laughing. Because you know me, I believe that the markets are manipulated. like 100%. I don't think there's any doubt about it. I mean, and I think we proved it just clear as bell right here with Tesla, because this thing is like following the mathematical models of accumulation distribution like a train on rails. And everybody was just, they were all freaking out when the market was falling like this. And I'm like, it's just normal stuff. And now it's a little bit bigger than normal stuff, but it's normal stuff. I mean, it fell right down through the Fibonacci sequence. The devil himself. That was Larry Fink standing there being introduced to the king of Siam. Right there by Donald Trump. Here you go. Meet this guy. You want to meet the devil himself? There he is. Oh my gosh, that was hilarious. I couldn't believe that. And the market's rallying. When do you think Larry Fink got his invitation to go to Saudi Arabia? Do you think it was right here? That's what I think. I think that this right here, this is when Larry Fink got his invitation to go to Saudi Arabia. That's so true. It's so true. It's so true. That's right when he got his invitation. Hey, you want to go to Saudi Arabia with us? Yes, I do. Crank, crank, crank. Turn on Aladdin, twist the knobs. Hey, Aladdin, we made some changes today. Let's give these guys a little bit of relief. Dial it in, turn it on, flip the switch. The man owns the world. Yes, yes, he does. Yes, yes, he does. He does own the world. All right. Now you know why we're getting a big rally in the markets. Okay, he owns the stock market. And I told you guys went and listened to my podcast or my Pit News Magazine article. You know that I wrote a whole article. My beliefs on that. That he's licensed Aladdin, which is his, Aladdin is his computer trading system. It's his quant system. He's licensed that to like 10 other great big giant firms. And so it's like a hive mind. He controls everything. He controls 10 other companies with this Aladdin model. Turns it on, if he flips the switch, it's not just his $13 trillion that goes to work. It's 10 other of the biggest companies in the world. All 10 of them working together. If he flips a switch, man, what do you think's going to happen? What do you think's going to happen? All right. Tesla won't load. How come? Oh, it says it's pending. I don't know. Oh, we got an order pending. Sell a put. Oh, that's pending. Why did that pen? It didn't ever fail. Oh, I put an order in there. I said if the market would give me a certain price, I want to receive $1,500. I said if it'll receive $1,500, I want to buy that. So the market's got to come down, and then we'll buy in. The problem. Oh, this is another lesson I got to teach you. All right, can't jump to that right now. We got to come back here. All right, we got to go. We're looking at Tesla right here. Okay, that's all right. Let's just jump down to that one and see. I'll show you why I did that. Because this is Tesla, TSLA, right? And this is the underlying that we trade with TSLY. TSLY is where we put all of our money to collect the dividends. Now, it moves a lot more slowly, right? It doesn't, not that it can't move big, it can, but it's going to go up a little bit more slowly. Why? Well, that's the way it's designed. It's designed not to rally really hard like this one, because as it goes up, it takes the profits off, right? So it doesn't, it's meant not to move really hard and fast. And so you can they suppress the share price, so you can keep reinvesting your dividends and buy low share price. So that's how they do it. So if the market starts going up, they give you profits to try and suppress that share price. That's what Tesla is. TSLY. All right. Tesla is the dividend version of Tesla. Okay. And they do this with options. And so this is all options money. And so if it starts to rise too much, like Tesla starts going like a banshee takes off out of there, right? They don't want this market to rise like that. They just slow rise is okay, but they don't want a big rise. And so they start paying out bigger dividends. And if you notice, the dividends on Tesla went way up. So our next payment on there, it's going to be nice. It's going to be sweet, sweet. Okay. And here's an option on there. Now, I don't generally put options on TSLY. And it's like, why not, Lan? Why wouldn't you hedge TSLY? They have options, and there they are. There's the options chain. So you can see it right here. Look at the options chain on this thing. Let's come in here and go out to, let's see, how long is this one? 92 days. Let's just go out to 92 days and look at this options chain. Look at the spread on that thing. It's $50. It's 0.62%. $50 of a premium that's only $105. So the put option on this thing only costs $105 for a 92-day put. But look at the spread. It's $50. So it's 50, it just went down 45. So 50%, 50% of $107. Nobody's going to do that. Actually, I take that back. Look how many people have those in there. People are doing them. 1,706 here. 378 there. People are putting these things in. Believe it or not, they're putting these things in. 1,706 options in here. That's crazy. At a spread of $45. Why would they do that? Well, they're not buying puts. Some of them might be. They might be dumb enough to think that you can get them buy a put there at 50% of the value. I don't know. They really think Tesla's going to tank really bad right there to think that that's what that's for. I think they're more likely buying the puts, or excuse me, selling the puts, not buying them. Of course, buying the puts means you make money when the market falls, and the market would have to really fall hard for those to become of any value. 92 days. Maybe that's what they're doing. Maybe they're buying them. Maybe they think they're hedged. Might be their hedge. Maybe. Don't hedge over here. Don't buy your puts over here. If you let's say you have $100,000. I got more than that, almost a couple $100,000 in Tesla. Right. So if I wanted to hedge it, I don't want to buy a put in TSLY. That's the last place you want to buy a put. All right. If you want to hedge your position, hedge it in TSLA. Buy your put over here. All right. You're like, Len, I can't afford to put over here. You better be able to buy a put over here. If you've got that much money that you feel like you need to hedge it in TSLY and buy puts over here that have a 50% spread value on them, you better have enough money to come and buy a put over in TSLA. Whatever you do, don't hedge your positions in TSLY when you can come and hedge them in TSLA. All right. Look at the value there. The spread is 0.02, not 50. Look, 0.01. 0.01. There's $20 to buy a put on Tesla, and it's $2,490. And if you got $100,000 in there, $2,400 ain't gonna hurt you. All right. All right. Also, let's pull up our little calculator. The thing is that you would need, you can't, it's not a one-to-one deal here. Because you have 100 shares in TSLY doesn't mean you have to have 100 shares coverage in TSLA. You don't. All right. You just want to hedge yourself, and you want to be probably a normal hedge would be 50% of your value. All right. 100% of your value would be a perfect hedge, and you don't need that. You don't need that unless you really think the market's going to tank. And if you think you need a perfect hedge, you probably ought to get out of the market, sell your position. Okay. But Lad, you said never sell your position. Well, if you think it's going to go down to the point that you need 100% hedge, then you probably should sell your position. Okay. So just be logical about it. It's not rocket science. It's just like, well, if I think the market's going to go and fall forever lower, then why are you even in it? Just get out. Okay. Okay. So if you're going to hedge using the underlying. So if you're going to hedge, that's the rule. If you're going to hedge Tesla, hedge it in TSLA, not in a TSLY. And that's any of these yield max funds. Okay. So now we're going to come down here to TSLY, and why has Land got an order in there? Well, I want to buy some more of these. I want to buy some shares here. I want to buy 100 more TSLY. All right. 100 more shares. It's not very much. but they're going to give me $1,500, but there's a big spread in there. So what did I do? I put a limit order. I said, well, I ain't going to pay your big spread. I ain't going to pay it. So if you're willing to drop your spread a little bit and come down and let me have these, I'll pay what it takes to get my 100 shares here, but I ain't going to pay your big spread. So I squoze the spread way down to a normal size spread, and I put the order in there as a limit order to say, I will buy it if you give me a good price. So the market's going to have to come down to meet my good price. And if it comes down far enough, it'll meet my good price. It'll give me my $1,500 plus it'll give me 100 shares. Now that's thinking, right? That's how I'm going to do it here in Tesla. So if market comes down, they'll give me $1,500. I'll buy 100 shares. I hope they have. I hope. Well, I really don't hope. I would rather take the $1,500 and not have the market fall down and stay underneath that red line for 92 days. That wouldn't be. That means I'd have to have the market would have to stay. Now it doesn't mean they won't give me my 1,500. If they give me my 1,500, that's cool. But we don't want the market to stay underneath that red line until the purple line. That wouldn't be good. That's not my goal. My goal with this is give me my $1,500, and then it would be nice if they would, if it is under there, I'd get my 100 shares. But I'm not really looking for 100 shares. But I'm also not looking to pay $50 or 50% in a spread. That's what that's all about. I'm just trying it, see what happens. So that's what that game's all about. We could sell some calls here too, but we don't. Well, we do want to get into. I don't know if I want to buy some long Tesla at $300 a share. I'm actually more interested in the in this one here. I really want to get into this one down here at about $100 a share on Palantir. So keeping my powder dry. I'm putting all my money into TSLY, and then trading it on TSLA, right? This is the one you look for. And then I'm going to really put all my money into PLTR. PLTR is just such an amazing company. They just do such a good job. And you know, who was that? MSNBC guy, Kramer versus Kramer guy. All right. Kramer calls PLTR a meme stock. Sorry, I have to. No, Kramer. No. Palantir is not a meme stock. It's a little meme. Right? You call it a meme stock. It's a little meme, but it's not a meme stock. Why is Palantir not a meme stock in my book? Pull out my book. What is the definition of a meme stock? It's not this. It's not Palantir. Meme stocks are stocks that don't deserve their high valuation, but are going higher. And the reason they're going higher is usually the reason they become meme stocks is because the big tech companies or the big hedge funds are shorting them in anticipation that they're going to go out of business, right? That's the meme stocks. It's kind of the now obviously anything can be a meme stock because all it means is that all the young kids are jumping on board and driving it higher. But the reason the young kids have been doing that, traditionally speaking, is because the hedge funds have been shorting them, buying lots of short positions and driving these companies out of business. All right. And the kids see that and they're like, hey, look what the short float is on this. Let's go in there and drive these markets higher so that we can put these rotten ass hedge funds out of business. That's their thinking. That's their thought process. That's why they do it. That's what the meme stocks are. This is not that. Now, it doesn't mean the kids aren't reading this and saying, hey, this is a great company. I want to buy into it. And it gets a lot of popularity and it goes up. But that's not a meme stock. It's just a popular stock. A meme stock has a specific reason why they're doing it. And it's doing it because there are hedge funds trying to put it out of business with short plays. And they're trying to drive the market higher so that those guys lose a whole bunch of money with their short positions. That's the idea of a meme stock. All right. So it's not just because a stock is popular. So if you look back at all the meme stocks, they've always been rotten companies that don't deserve to have a high valuation because that's why the funds are all shorting them. They think they're going to go out of business, right? And the kids are like, let's drive this thing to the moon and drive these guys out of business. It's not meant because they love the underlying company, although they might. Some of them might think that it's a neat company, but mostly it's not. It's because they want to drive the hedge funds out of business because they can see a huge short on them. That's a hedge fund. And that's not this. I mean, if we go in here, let's come in. I don't know if that, does it show, let's go look and see. Let's go look at PLTR. PLTR. Does it show the float? I think it does. Right up in here. Don't we have the float right there? See, look, short float. See that? Do you guys know what float is? That's how many shares are available. This is the float right down here. 2.34 billion shares are what's traded. And out of that, how much of it is short? How many people think the market's going to fall? Right here, short float, 2.57. So that's almost nothing. That's just basic hedging. There's a few people have a few short positions on there. So that's 2.57% of the market is a short float, meaning the float number of shares that's available, the float, and 2.57 of it are short. And so a meme stock is when that number right there, that short float number, gets really big, like 20, 30, 40% is short. And if that's the case, that's where the kids have come in and said, they find out, oh, that's all these big hedge funds are going to try and put this company out of business. And so they think this market's going to go down. So the kids all come in, run that thing up, and everybody who's short loses a lot of money, billions of dollars, right? So that's a meme stock. So meme stocks aren't just popular stocks. They got to have some underlying reason why they're doing that. And so I don't agree with Kramer calling Palantir a meme stock. It doesn't have that extra reason for, oh, look, this is even more obvious. Drive 1, red bar. Drive 2, red bar. Drive 3. So let's go look at that over on Track and Trade. So we go to Track and Trade, and we got to turn it off to see that. We got to turn off our bulls and bears. Once in a while, you have to turn bulls and bears off. There you go. There's our red bar. So there's our drive 1, drive 2, drive 3. All right, so there's where we're at. That's drive 3. Maybe it makes it more obvious, doesn't it? That one little red bar turned red right there. Okay, so this is where we're going to expect this market to come back down in here. And then what are we going to do? We're going to sell the Harley Davidson. And we are going to buy, and go big long on the B drive. Okay, so let's come up and look at AMD. AMD is the same thing. I mean, we're just kind of reiterating some of the same things. We're looking for it to break that blue light. Is this little peak right up in here? Oftentimes, now remember this is a little key. Oftentimes you get one big bar at the top or at the bottom, just like that. The big long bar up, and that's the top. Or you'll get a big long bar down, and that's the bottom. All right, so like right here, you got big long bars down. Well, there's got 3 of them in a row there. But usually that's what you get. Instead of a whole bunch of little bars like this is not generally the bottom of the trend. All right, see that? It looks nice, and it rolled off the bottom, and it came back up, and it even made some green. But that's not generally what you see at the bottom of a trend, all right? Generally, at the bottom of a trend, you see big, huge bars like that. And when you see that, that's what is a better sign that, see, and even right in there, it almost kind of felt like that was the bottom. These big bars. So big, long bars at the bottom, usually one big bar at the bottom is what you see. And so at the top, you get the same thing. So you get kind of a big long bar at the top, and that's usually it. That's the end. Is that going to be? Could we get another bar and go up and break it? Nah, of course, certainly. You can always do that. But watch for those big long bars. Those big, they call them on the bottom side. It's called the Wyckoff spring. Right? Let's get rid of all this, and you can see that it has this bottom, what looks like the bottom right here. And then it came down with that big long bar, wham, just like that. We call that the Wyckoff spring. All right. Nowadays, people don't call it that as often as we used to in the olden days. All right. And that's just, now we just call it a head and shoulders formation. Not that it wasn't a head and shoulders formation back then. It certainly was. It's just that Wyckoff was so popular that we called that a Wyckoff spring. And so that's what Wyckoff called it. And that's just your kind of your natural trend line with that little head and shoulders right there. And there's your break, and away you go. You take that thing up. So that is, and then of course it's going through the yellow bars. And if you want to turn off the bulls and bears, do that. Right click, chart overlay, bulls and bears. It's gone. Now we're trying to see what this just doesn't. I don't know. It just looks like one big shot straight up. I mean, yeah, we got some little red bars in there, but are you going to call that drive 1, drive 2, drive 3? Like, is this drive 1? Is this drive 2? Is this drive 3? Is that counter trend, counter trend, counter trend? Maybe, maybe. And that's your blow off top, and that thing's going to come back down now. Well, we got to turn the bulls and bears back on to see where our blue lights are. Here they are. Here they're coming. They're going to intercept. Is it right there? I don't know. Have to wait and see. But we're not going to be buyers right here. I can tell you that, because we're above the red, going up and trying to hit the yellow. And that's moved a little bit on the Donchian channel. So we can bring our Fibonacci ruler in all the way from the top, all the way to the bottom. And look at that. Came right up in there. Right up to, see how perfect we can draw this in here. The perfect mathematical model. All right, see how close I got to 50% on that big bar right there? I don't know. It didn't touch it, so it could go up and touch it. Could go up to 61.8, but this is our Fibonacci delta Kona probability right there. It's one standard deviation from that whole thing. Look at that. It's already back to almost 50%. Now, it's got to break it. It's got to break it eventually. It's got to break it, make a drive 2. So this is drive 1. This is just our first drive. And Larry Fink went with Donald Trump. So does that mean we're going to get a second drive? Yeah, I think it does. I think it does. I think that was a show of kindness. And so I think that kindness is going to be paid off. And I think that that's going to reflect into a second drive high. All right. That was kissing the boot. All right. Here we go. Who's owned by who? Who do you think owns who? I don't know. The man owns the world. Certainly does. He's the devil himself. The devil himself. All right, let's come in and see. This is let's turn off this one, chart overlay advantage, bulls and bears. Turn that off. Let's go ahead and label this one. All right. So AMD's a good oh, this is APP. Apple. I thought it was AMD. That's all right. We'll do this one. APP. This is A1. This is A2 right here. I think most of the market's in basically the same patterns. So there's the one, and then we're going, this is A1 here, A2 there. Almost like a little A3 in there, a little pennant formation, but it's taken off. It's not red, so let's not call it one. All right, let's stick with our red and green. Look at that, though. That's such a perfect little one. We almost want to call this one A2, but no, we got to call this. This is our break. That's A1. That's A2. It is what it is. And that looks like an A3 to me right there, but it didn't ever go red. But look at that perfect little pennant right there. Almost call it part of A2. But I don't know. That means that if this was A3 right here, A3, then this is the top. And we're not going to get another break high. So let's put our Fibonacci ruler in there from high low. Well, it is. It's right there. That's what this Donchian channel's telling us. All right, so there we are. Right dead center, right there at 50%, one standard deviation. And if we turn the bulls and bears back on, we see that blue light coming in there. And that blue light's been tuned in to Larry Fink, to the BlackRock algorithm. All right, so that thing's been tuned into BlackRock algorithm. It's just a natural trend line up there. That's all we're looking for. We're looking for it to break. We want to see it break and then come back, give us an opportunity to put more money in, go to drive B. And drive B is usually the big one. All right. Drive A is usually not the longest drive. Drive B is. So the big opportunity is coming if we can get a little bit of a pullback and get back into the market with lots of money. All right. All right. Bristol Myers is the one that's really surprising me, because Bristol Myers was late to drop. And it's now dropping like crazy. And this is the one we're putting all these covered calls on. And so we've got our spreadsheet over here with all of our covered calls. And so we got $500 playing against our $2,300. So we're down $1,800 on this thing. And it just keeps flushing. But that's all right. We just keep making money on our covered calls. So that's just all we can do. We got to put another one in there. This one we've received 100% of our profit. So we could take that off, liquidate that option. We'll just mark it out of that thing. So we made $80 on that one, right? Close. That was as much as it'll give us, $78. So let me come in here. And we're going to put that in here. That's another $80 that we can add to this. We'll just bring these down one. I'll just put total premium 80. Was it 80 or 79? What did it tell us? 78. $78. So that was max profit. We couldn't get much more than that out of it. That's all it had in it at the time when we put it in there. All right, here is a little lesson I'm going to teach you. Right now, we're going to put on another covered call. Now, the rule that everybody gives you is, no, don't ever put a covered call on below your green line, because then you might lose it. Don't listen to those people. You got to sell down here. You got to get some money out of this thing, or it's not worth it. Then you're just like, well, if the market keeps going, you can't keep selling covered calls. If they take it away, then you just buy it back. It's like, okay. You're going to only receive $42 on that thing. It's not worth doing. The other one's clear down here. It's $200. But if the market stops right there and starts turning around going up, well, they'll give you your $200. That's your covered call. I don't know if we want to do that anyway. How far is that market going to fall? If we come in with our Fibonacci projection tool, I'm going to go off of this blue light right here to here to here. Look at that. It's still got 61.8. It's still got some downside potential for this market to fall. It's going into accumulation stage. I don't know. This is really ugly. Why is Bristol Myers tanking so bad? It's all technical at this point. I can't, I mean, you could come and ask the fundamentals, but all they're going to do is make some shit up. I don't know. You don't want to ask the news. They don't know anything. Let's come and let's just come and look at the fundamentals and see. This one here is the one that's giving me stress. BMY. BMY. What's it saying down here? Oh, look at the earnings. That's what killed us. But look at the upgrade on this thing. That was in December. Jeffries, buy, hold, price target $70. Well, that guy wasn't very smart, was he? He's dumber than me. What most favored nation status could mean for pharmaceutical stocks? Oh, you know what? That might be why these guys are tanking. Why am I so slow to pick up on that? Bristol Myers Squibb. They build all their stuff in China, and they got a big. That's why. Why Bristol Myers Squibb Company is among the best pharmaceutical companies to invest in amid the domestic manufacturing boom. Well, way to go, insider monkey. May 13th. They said that when? 2 days ago. Top Bristol is breaking out bad medicine news on bad medicine news. Should Spider Russell 1000 low volatility focus on investing radar? What most favored nation status could mean for pharmaceutical stocks? Well, that makes sense, I guess. People are scared of this. What's going to happen with them? But aren't they bringing their manufacturing back to the U.S.? You know what they should do is they should actually put it back in Puerto Rico where it was before. There used to be a law that made it very economical to help out the Puerto Rican people. They put all the pharmaceutical stuff down in Puerto Rico. It's all being made in Puerto Rico, which is perfectly fine. I mean, we like Puerto Rico, right? They're like 3 inches away from our Florida border, and they're like a U.S. protectorate and everything. They're like, people want to make them one of the states of the United States. Why they took that law away that made it take all those pharmaceuticals to China instead of Puerto Rico was really disturbing to me. I don't know why they did that. And they just moved out of Puerto Rico like stupid people. Put it back in Puerto Rico where they belong. I think they should go back to Puerto Rico. I think Trump should set that up. That was nice for Puerto Rico. Made Puerto Rico a really, really wealthy little country down there. They were doing well with that. And then they took them away. All right. I guess there's nothing else we can do there. I'm just going to hang on to this for a minute. We got our little put option in here. I don't know. That's a bad place to have that put option too. $260. We'll see. We'll let that one play through. We may just end up getting our little handies handed to us on that one. CRM. We're doing okay on CRM, though. CRM. Drive one. This is almost like a full up one ABC 3-drive pattern. Drive one, drive two, drive three. But it came back so far that I hate to call this part of that drive down. It is lower. It is lower than the peak. It didn't ever go up and touch it. It's just so that, I mean, it is what it is. It's a 3-drive pattern. Drive one, drive two, drive three. It's just, I hate it when it does that. That's almost wants to start over with another second drive, but hindsight's always 20/20. All right, so then we have a higher low right here. So you see the low down in here. So watch for your low. And then the next lower low. That's it. And that becomes your head and shoulders. It's ugly. It's as ugly as can be. There's your left shoulder. There's your head, neck. There's your right shoulder. There's your neckline. There's your little right shoulder. And it just broke right there. It is what it is. Sometimes they're not pretty. But that's it right there. Third drive down, drive one, drive two, drive three, head and shoulders at the bottom, and away it go. I mean, it's just classic, right? Straight out of the manual. It's a little bit sharp. Oftentimes we like to see those level off a little bit more, like an airplane. Don't come slamming down. You want them to kind of flare a little bit better. It didn't flare very well. It just took off and went like a rocket ship. Okay, let's turn off this and see what the red and greens are doing. So it's saying right here, if we go off the red and greens, I like this. See this? This is CRM. It had that same little pennant formation right there. Same little pennant formation. Let's label it. So this is our odds. This is A1. This is, I want to call that A2 right there, but the color code is saying, no, Lan, don't do it. That's your A1 right there. So there's A1, that's A2. Look, there's another one, another little pennant formation right there. Little pennant formation right there. Just little pennants. 1, 2, 3 little pennant formations in a row. And it hit right there. It hit right there. There's your 50% level. Now we got 61.8 looming up there, but it's right now dead center of the Fibonacci sweet spot. So go from the top to the bottom, and we're right there right now. Right inside the delta cone of probability. So we need it to break. Is it going to go up one more and give us a nice 61.8? If it does, the whole market, I mean, basically the whole market, is doing this. Now we're at 309 days. Now, why this is important for us is because we can sell, why this is rallying, we could sell a call up in here while it's doing its little pullback thingy, right? 36 days. And we could sell a call up in here. That's $450 above the 61.8, 286. How high do you think that thing is going? But that's our mathematical model for that. That's why we do this. There's $450. Go ahead, sell that baby. Let's just mark it into it. Oh, yeah, there it is. I didn't even look at the chain. It's not the best, but not bad. All right. So, that's a call. That's a put. So look at call, Lan. Calls. There we go. Yeah, see. Again, not the best. Well, that's okay. We did it at the right spot. 122, 8,000, 7,000. It go right up to those numbers right there and then turn around and drop, and we'll be fine. 457. So we're going to pick up $400 up there while we look for this market to make its little rally and then turn around and fall, and then we can start buying in again. We could add another long call when it gets down here and go into the B drive, and then this will pay off with $455 while we're waiting, and that's the name of the game. All right. But Lan, what if the market just keeps going up, 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 up like that? Well, it could, but how often does it do that? Not very often. Not very often. Usually we get the little rebound and we get the rally. And if that happens, we'll be in good shape. Okay. BMY. Don't look at that one. It's just bad. Lan was bad. Made a bad decision there. Okay. AppLovin. Are we going to do the same thing here? No, because we've only got shares. This was our day trade that we got into on this market. So that's why we've tightened our stops up in there. AMD, are we going to sell a call up here? That's the question. Should we sell a 30-day call up there? 642. Yeah, Well, it would be up here. At 50, that's 50. We got to go up to 61.8. And that right now is only $83. I don't want to do that. Well, it's 121 at 61.8. Do we think it's going to get up there? Not without a retracement. Not without a. It's got to break the blue lights in there. That's kind of that big bar. This has fallen back. That's why that's not as expensive today. Implied volatility went to 45. Problem is we don't know if that's high or low. Let's come in here and turn on historic volatility. Oh, it's low. It's low, low, low. Volatility's gone way down. Theoretical value is $288 on that thing. You're only getting $121 for it. No, it's not a good price. Cancel. We ain't going to do that. All right, let's come in here and CRM. That's the one we just did. Salesforce. Cisco. Holy cow. What the heck is with Cisco? Look at that, baby. Wow, wow, wow. Cisco, what did you do today? Is there some news on Cisco? Should we go look? CSCO. Wow, look at that. Anybody say anything about it? Look at all these upgrades. The Middle East will be a center for AI outgoing Cisco upgrade. Core, we've downgraded Wall Street's top analyst calls. The fly. These stocks are moving the most today. Cisco jumps on strong Q3 results. High guidance AI orders. Let's go look and see. Did they have earnings today? Oh, they did. Oh, they had earnings yesterday after hours. Oh, look at that. Surprise high, surprise high, surprise high. Wow. Let's go see. Where are we at the top? Let's just draw some trend lines in here. Technical analysis, land. So that would have been right there. Our little head and shoulders. So we're going to go off of here, 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 here. Ooh, that's a steep one. But it did. It came in right here. Right there was your steep little entry. We were a couple days late on that. We came in right here. But look at this baby run. How come we only have $500? This is just a tiny market, $65. Look at that. Wow. You know what? Don't freak out. We got the first leg. We just didn't get it with a lot of money. So we got this next coming in here. It'll come back down. Trust me. Trust me. Sometimes trust me. Trust yourself better. Do what you want. Okay. I think it's going to come down, break those blue lights. Where the blue lights are going to go up and intercept. This market will intercept. Look at the trajectory of this thing. If we take those blue lights, and they're going to jump, they're going to accelerate because that market just took off. So it'll accelerate tomorrow. There'll be a big gap in there. The dot will be way up here. But just look at this natural trend line, blue light intercept. It's going to intercept. This market probably come up in here. It might break the previous high and dance around up in here, kind of like Palantir did. And then maybe we'll get a break back down. It's got to break the blue lights. You can't get in on the A2 until it breaks the blue lights. I don't care what they say. I don't care how high it goes. It goes clear up here. You just got to sit and watch. You can't go and chase it. So it's got to break those blue lights. When it breaks those blue lights, and then it turns and starts with a first green candle. Now, sometimes it makes a little second green candle, but it depends on how strong the market is. So that will be the little pattern we'll be looking for at the blue lights like this, all right? And it might go on the first, just a little tiny one, and then take off and go on the second one, and that'll be your little ABC pattern. And that will be your B1 down in here. And again, that's where we're going to back up. We're going to sell our Harley Davidson. And we might be without a motorcycle for a few days until we can cash out on our option and go buy our motorcycle back. All right. But that's the way it's going to go. That's the way you got to do it. Carvana is the same thing. We're waiting for the B1. This is all a drive. It's all a drive. Look at where it's at. Look at that blue light. It's coming in. It's going to intercept. I promise you it will. I guarantee it. It will break that blue light eventually. and then that market will go on a B drive. Now, will it go on the B drive? I can't guarantee that, but will it break the blue lights? Yes, it will. I guarantee it that it will. It will break those blue lights at some point, and the A drive will be over. All right. And we will come back down, and it might just be one day. Who knows? But it'll break those blue lights, and we'll go into a B drive. Well, we may not go into the B drive. Can't guarantee that, but it may just flush and come all the way down here, but I don't know why it would. All right. But it's going to break those blue lights. Guaranteed it. When? I don't know when. When it intercepts. It'll just keep following it up until it just gets up there, and then it'll eventually, bam, it'll cross. And when it does, it'll cross, and then we can get in. We can go in on the next run. So we're just going to wait. We can't do anything about it. We missed this one altogether. We're not in Carvana. Oh, we feel bad about that. I know we all feel bad about that because there's a CVNY that I would really like to get some money in. And there's the dividend version of it. And it's brand new. Look, it's only been trading for 1, 2, 3, 4 months, not even a full 4 months, 3.5 months. That's the brand new Carvana. And if you go over and look at Carvana over here, CVNY, and yeah, I feel bad I don't have any of this. Yeah, I feel bad I don't have any of this. Look at the dividends on that baby. $2.68 per share, and shares are $44. This is one of the highest returning stocks that we have. In fact, I think if we go over to our Pit News calculator, let's pull up the Pit News calculator. We go to pitnews.com/UBI-calculator. And we come in here to our break-even calculator, and we look on our list. Let's just go ahead and let's just, we got a break-even, show break-even table. Oh, that one's in alphabetical order. It might be this one here. It's not that one. That's the new one. That just calculates our dividends for us. So we come in here. Let's put in $10,000. Let's put in $100,000 because that's how much we're going to do, right? We're going to put $100,000 in there. Look. Carvana is the very first one. It's the highest yield. So if you put in $100,000 in 1 year, technically speaking, they should give you back $148,000. That's an 8.1% payback. That is unfreaking believable. Carvana. Tesla crash is the second one, but that's if you think the market's going to go down. I don't think Tesla's going to go down. Now, it could for a few short days, but I'm not looking for the crash to happen. That was funny that he put they made it CRSH. That was a joke. Hopefully you guys caught that joke. All right. And then we're going to come in here to SMCY. That's our third one in the look at the return on that one. And Palantir. There's Palantir right there. The reason I like Palantir so much is because Palantir is just such a strong company. It has such great earnings. But it's a payback in 11 months. I mean, heck, it's not even 1 full year. I mean, all of these will pay you back your full investment in less than a year. Look at that. And Carvana's at the very top. So, yeah, I feel bad we're not in Carvana, but we can't just jump in. You got to be smart about it. Let's be smart about it. So if this market comes up like that, we got that, and then we got drive. We can't do it on this thing. It's got no tools. No tools. We got to come over here. All right, here we go. So that's got to be our A1 right there. And that matches up with the blue. Right there. So this is our A1. The thing is this A1 here, is this all one A1? That's what always, is A1 down in here? Is this little pit down in here? Or is this A1? Is this all A1 right here? Let's just call that A1. Who knows? We'll see at the end. Doesn't really matter. The A2, it's an opportunity to enter on the second drive up. So there's your drive 1. But see that you almost want to say, well, you get in here. I don't know. Let's come in with this little head and shoulders. You put that in there. Little head and shoulders goes in here. Go up here. There's nothing there. There's no right shoulder. That would put this over here. So there's your little break. So that's really, on your head and shoulders, that's break 1. So let's just call it right here. A1. This is A2. That would mean we got an A3 coming. On C, but this is CVNY, so we don't really do this one. We do CVNA. So there's A1 right there. Now is A1 is A1 down in this little pit right here, or is it this little break right here? That's the head and shoulders. There's the blue line. This is all A1 right here. I would just put it right on the arrow. How about that? We'll just say this is A1. That would be A2 though. So we'll just say that's A1. Ugh, this thing was just so strong. Look at how strong it was. The only other little spot was right here. Kind of had a little pennant formation right there. Right? And then we've got another little pull back, little pennant formation right there. That wasn't really one. Each one had a higher high, so that wasn't one. So you can't call that. There was no break. A1 will come in here. This in A2. Right in there. And then we got A3 up in here. So let's just call this A3. It could go to A4. But A3, we're getting up in here too high. We don't really want to be buyers up in here, obviously, right? We're waiting for that to break so we can get into Carvana. And that's why we want to get into Carvana. I'm not really thrilled about buying CVNA. It's $300 a share. I'm thrilled about getting into CVNY. That's what I want to do. I want to see Carvana have a little flush in here so I can get into some going to drive B on CVNY. I'm going to put a big bunch of money in this one because I think we got some. Right here's where I want to be a buyer. Put in your Fibonacci ruler, your delta cone of probability. Do you think it'll come back to there? I don't know. If it came back to 38.2, that's where I'd start putting money in this one. All right. So that's the one I'm pretty excited about. Send it back. This is where we want to. And I would be a little bit more inclined to go in right in here. 38.2, 50%, right in there, man. I would load up. I'd sell my Harley on that one. All right, LFG. Title, Yield Max Crypto. We're going to skip that one. It's the same pattern, same thing. All right. MSTR, that one we can't, it didn't load right. I don't know what's wrong. We have to unload it and reload it. But this one here, we're going to say we're going to buy some shares. We sold a put down here. We're going to collect $200. We're going to buy some shares. It broke the blue light, Lee. See that? I told you it'll break the blue light. It'll break the blue light. Now we're coming down. Now we're getting the counter trend in here. Look, it's choppy, 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 smooth, smooth, smooth. Counter trend where it's coming down. It's coming down. How far is it going to come? Well, draw your Fibonacci ruler in there. Measure the delta cone of probability. This is misty. This is one that I got way too much money in this one. Way too much money. But I really love it when the dividends come in. MSTY. So again, this is the dividend version that we don't really. I'd rather do the work on this one here, but it didn't load. I have to unload it, load it back up. There's our trend line, and it's going to come down. It's going to break those blue lights, and then it'll go again. And it's based on Bitcoin. That's if Bitcoin does its thing. So not that one, this one. So that's where we're at. Are you going to buy any land? Well, we put a put option in here, and we sold it for $200. I don't know what the heck we got out of it because it's got really high. Look at that. Oh, man. Was it? Oh, it's 64 days. Well, the spread was 0.24%, which is rotten. But anyway, it is what it is. We'll see what happens there. NVIDIA's just going to the moon. We got a lot of money in NVIDIA. We got our put option in there, or our call option in there. We got our first little drive there. We got a little break across there. There's our little head and shoulders formation, just like this. Lift, right, head, there, and down it comes. There's our break right there. Where's the A? Oh, wow. That thing's clear back here. It had that ugly little. Yeah, I almost want to call this A1 back here, but not really because of the head and shoulders. I don't know what we're going to have to do on this one. I'm going to have to call Larry Pesavento and say, Larry, this is a really screwed up one. Where are we going to put our A1? Larry would say, put it right here. No, he wouldn't. He'd say, put it right there. I don't know. We got enough little Look at this little pullback. We got this little pullback. We got this little pullback. We got lots of little. I think we're going to go on the head and shoulders side. We're going to call this A1 right here. And then we're going to call this right here A2. Right down in there. And that little baby right there, that's an A3. It is what it is. You got to count them. You got to count how many of these little pennant formations you get. Sometimes you get a lot of these little pennant formations. That's not really necessarily good because pennant formations are opportunities to get in the market. But if you got so many of them, it makes the market choppy. This is A4. You know what A4 is? Plastic explosives. And look at that baby rocked out at A4. Big long bars at the top. Those are oftentimes are exhaustion bars. The blue light is way back here. Look at it accelerate. See, I told you how it accelerates when it does that. See how it was going like this, and then suddenly the market took off. So those, look at the big gaps in the blue lights. So the whole trajectory of those blue lights has changed. It's now like this, going straight up. And that's that. We'll go off the GAN fan. We'll see where it's at. Oh, look at that. But see, I don't like that. I'm going to put this over here on the A drive, what we call the new A drive, the bottom here. Now, I don't know. It's still there. Oh, it's still there. It's perfect. It's right between the, look at that. Right between the two. It's right dead center of the cone. The cone of probability. The GAN cone of probability. That's what that is. It's in there. It's perfect. But I think it's going to fall. I think it's going to fall down. Might go up a little higher. Could go up a little higher. But I think it's going to fall down, and it's going to come down to that 2-to-1 down in there. Now, you got this natural trend line right up in here, which is right there. A little bit lower than the 1-to-1. You think it'd come down and touch that? I think it's got to break it. I think it's got to break it, and it's got to come down. It's got to come down to 2-to-1. And when it does, we're going to sell the Harley. Sell the Harley. And we buy like crazy right in there. That's where we're going to buy. All right. We don't know how high it's going to go. It might have a couple more to go. If we went off this one, back to this little peak right up in here, could be something we could watch for. Do your little trick, Lan. Okay, let's do the little Fibonacci trick. It's already reached the little Fibonacci trick. Oh, come on. It's already reached the little Fibonacci trick. If we take this from that low and see those bars, those yellow bars, that's our neutral zone. We put that right between the Fibonacci sweet spot. There's a little higher one right there. But see, right there, we center that around the neutral, around the delta cone of probability for that side. From the low to the high, it's already right there. See that? That's the projection. That's where we would anticipate the market going, and it's right there right now. So I think we need to get a little pullback, break those blue lights, and sell the Harley right there. So we want to buy a lot more NVIDIA. He decided, what's his name? Is it Jason Wong or something like that? I can't remember. He decided to make the headquarters for NVIDIA in Taiwan. In Taiwan, not in the U.S. I thought Trump would have been able to convince him to put it over here, but nah, not surprising. Not surprising. They're in Taiwan. All right, that's where their new headquarters is going to be. Palantir we already talked about. PLTY we talked about. SMC, that's the last one. And that's one that we bought with shares. And we also have a call option on it. Did we buy that call? Yeah, let's go see our position on this thing. We bought a call, 309 days, and then we got into it with shares too. Remember, that was our nighttime pickup where we couldn't day trade, so we put in some shares. That's a big long bar right up in there. We could, I don't really want to get out of this. I want to just stay in it, even with the shares. I'm not going to suck my stop up in there because that would take us out of it. Just had a little pop back. Not really interested in that. I'm just going to leave that at break even for now because I'd like to add some more shares. I just like to get another bar down. You could buy another one. Just how many shares we got? We have 23 shares. We could come in here and we could say, we could put in another, what's half of 23? 10, 11. Well, let's just do another 10 shares. We'll put another 10 shares. We'll put it if it breaks above that. Actually, let's do it with a limit order. Let's do 10 shares with a limit order. If it comes down here, we'll actually buy it low. Let's see if we can get in like that. That would be nice. We'll buy 10 more shares there. Okay. If it pulls back, we can get it back to there. All right. That's it, guys. That's what I got for you today. I hope most everybody stuck with us. I'm pretty surprised. We got about the same number of people here at the end as we had at the beginning. So maybe you left your computers on, you went down and cooked eggs. I don't know. That's the name of the game, though. That's what you do. It's making sausage. Just making sausage. And we're making a little bit of money here. We got one bad one in there. And Misty, that's not bad. We don't feel bad about that one. We're just going to pick up some more shares on that. That's all that is. We got one loser. And I wasn't thinking very much about BMY, Bristol Myers, and why I thought that might go down or up or one way or the other. But the fundamentals on that make sense. But we've only got 92 days left on that one. We may just have to take our lumps on that one. But we're going to see if we can't continue to sell some calls against there. We're selling a put in there right now. We're going to have to see on that one. That one's a troublesome one for us. We might just want to cut that one and liquidate it. We've got $500 on it. We're only down 2,000, not 2,500. While you're here, we could just liquidate it while you guys are here, just so you can see that's what we're going to do. Just get rid of it. Just get rid of it. I don't like it anyway. We'll probably get rid of it just as it turns and starts to go up, which is probably what it'll do on that second drive down. Problem is that our expiration is, well, that's not our expiration. That's for here's our other expiration. Mark would have to really turn and go back up just to get to break even would be up in here. We're going to get that big of a rally out of this thing? I don't know. I don't know. Let's keep it just to play with it. All right. We'll see if we can't resurrect it. See if we can't. Sometimes just cutting your loss is the best thing, but we're going to play with it and see if we can at least sell a few more calls against it. All right. We've already pretty much lost everything that it's got in it. Let's see if we can collect a little bit more premium on there. All right, guys, that's it. That's what I got for you. What's the UBI calculator location? I haven't seen it before. Well, I haven't really advertised it very much, Randy, because it's in the works. It's got bugs in it. Not too many, but it goes with my course, which I'm creating, the UBI course, and it's part of the UBI course. So I haven't really given it away yet, but since I pulled it up, I've been giving it to the guys who come here to the YouTube class. I'm giving it to you YouTube guys. So let me pull it up here. Pit News Calculator. There it is right there. So it's called, you don't need all that. That's not so that's the address. I don't know if you can see it here. I'll pull it up. Crappie. You can play with it. If you find bugs, let me know, because not exactly sure if it's 100%. There it is. Let's see if we can file. Can we make that bigger? Find, go to font. Do they let you make fonts bigger in this program? It doesn't look like it. All right. Well, I tried. That's the address. pitnews.com/UBI-calculator. Pretty simple. UBI calculator. pitnews.com. There's a couple versions of them out there on different URLs, but this is the most recent one. I've been trying to combine them all together into one calculator to make it easier. So you got 3 dots. This is the investment calculator. This is the break-even calculator. And this is the dividend calculator. All right. So those are the 3 little calculators that go along with the course. So if you put your $10,000 in here and say, I want to put $10,000 in, you can choose how much income can I earn with $10,000. That's what's going to tell you. But notice this is also a drop down. So you can come down here and you can say, how much do I need to invest to make $10,000? So if you want to make $10,000 a month is your goal, $10,000, then you can hit calculate on that one, and it'll tell you how much you need to invest. So in Carvana, you would need to invest $80,000, and you're going to make $10,000 a month. All right. Tesla, you need to invest $94,000. Palantir, you need to invest $116,000, and it'll make you $120,000 a year. See, $120 all stays high. But if you come and drop it into the other one, how much income can I earn if I have $100,000? See, it's going to give you that's $10,000. If I have 10,000 in there, I'm going to make 14,000 a year, 12,000 a year, 11,000 a year into these different funds. See, that's what that calculator does. Then the break-even calculator, you come in here and you say, well, where's my break-even? When does it give me my money back? So let's come down here to, let's just go Amazon. And then you can see that Amazon, that's your zero line right there. That's your Amazon. And then you slide this down and you can see where you make money and you lose money and where breaks even points are. So that's kind of fun. It gives you all the statistics right there. And then you got just a little dividend calculator, because we're doing that all the time. You just put your numbers in there. What's your share price? What's your dividend? And what is it, monthly, weekly, or quarterly? And how much is your investment? You hit calculate, boom, it'll tell you the answers down here. This I made because, we do that when we do our UBI calculator and we do our on our spreadsheet. So I just created this little calculator for us. It's kind of fun. I think I want to split this in half so we can have it compare. So I can do two of them. I can have let's compare PLTY to TSLY, and then I can have both the numbers down here, have it split in half and have a comparison. I think that would be a really cool little calculator if it actually did two of them. We could compare. That would be a nice idea, right? All right, so I'm working on it, guys. I'm trying to get some of these tools available for you. You can play with it and let me know if something's not working, because it's still in development. But the most important thing right now is let's go all support Claire over on her podcast. She felt bad because there's only a couple people went and did it from my notice yesterday, and she's like, only 2 people came over and subscribe to my podcast. So if you guys didn't subscribe to Claire's podcast, it's free. It doesn't cost anything. Go over there and subscribe. Let's help Claire. She felt bad she didn't get more people. All right. So that's it, guys. Maybe I didn't talk it up good enough. I wasn't a very good advertiser for her. All right. That's all I got for you today. We're going to let you go.
All right. That wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.